Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, November the 2nd. So happy Wednesday. I can't believe this year's flying by like it has. Happy Fed Day. We had a wild and woolly day in the market today. I hope you were prepared for that ahead of time. I've got the S&P or the ES here on the chart, and we're going to look at that. Just a crazy, crazy day. This is the NASDAQ over here, and then this is the ES. Same thing in the SPX here. And there's a tick chart and a multi-time frame indicator. But let's focus in on the overall market here. This is the ES. Again, the black area is today's cash session. The light gray are the futures. So last night we were kind of trading like this, kind of sideways, and as it goes, going into a Fed meeting or a big event like this, you get a lot of uncertainty, and that's exactly what we got. We were chopping along and kind of chopping along. Right there is when they announced, they had the Fed meeting announcement, and it was an increase of 75 basis points, right? And that's a pretty big hike in itself. If you've been trading for a while, you remember back in the day when the Fed would raise the rates 25 basis points or so, and that was a big move. But now it's 75 basis points, and so the market loved it. Straight up here, came into skyline, kind of came back, caught its breath, and then went higher. Then, right there is when Powell opened his mouth and started speaking. And guess what he said? He said, let me find the quote here. You can imagine it wasn't good, right? The quote says, "It is very premature to be thinking about pausing." Right here. Boom, 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 boom. That's 150, it's 147, but almost 150 points from the top to the bottom. Just tanked the market, right? I take that with a grain of salt. He seems like he always says the wrong thing, or uses words or language that are, kind of irritating to the market. He probably could have used something a little better, but at the same time, he's getting the point across that they're not done. Rates are going up. Guess what what happens when rates go up? Housing market comes to a grinding halt. Car market, all, housing, cars, food, all that stuff. We've already got inflation going through the roof. Guess what? It's not going to get any better. I don't think, not anytime soon. And he's kind of saying that, and they painted themselves into a corner. We've been talking about this. If you've been listening to any of the videos I've been doing for the last probably year and a half or two, I've been screaming from the rooftop, what are you waiting on? What are you waiting on? Do something, do something, do something. And then they wait too late. They get way behind the curve, and now they're having to make these big giant rate hikes. And again, this is necessary. They have to do it to contain it and all that kind of stuff. This is I guess the logical steps. Those guys are a lot smarter than me. But it sure seems that they're going about this, very, very late in the game, way past the curve. But anyway, be that as it may, doesn't really matter. That's all up for discussion. But what really matters is where do we go from here? Let me show you this. Let's take this out on a one-year chart here. And as you can see, that's today. Boom, right through the snow line. That white line is a voodoo snow line. We came up to this voodoo snow line. I thought if he talked dovish or said any language like, maybe we can take our foot off the gas a little bit here or something like that, boom, we're going higher. And I thought that was kind of a decent chance that would happen. The CME, they keep a FedWatch tool, and it was showing a 91% chance of a 75 basis point rate hike. So everybody knew it was going to be. It would have been a shock if it would have been more or less, up or down with the market, right? But it was the language around the rate hike that's kind of spooked the market. So Probably there's all-time high at the very first. That's the first trading day of the year, right there. You can see that. Um, we're still in this direction here. We're probably going to go lower, take all this out and all that kind of stuff. Now that might change next week, so don't get too quick to, you know, short this thing and all that kind of stuff. The reason is that next Thursday on the 10th, we got a lot of data coming out. Tomorrow we got payrolls on Friday. We still got some earnings sprinkling in out here coming in, but on the 10th next week is the next CPI number, which will tell if inflation is continuing to go up or maybe stabilizing a little bit or maybe even going down. That'll be a huge deal because the Fed will be watching. We'll all be watching next Thursday. So if the CPI number comes in and inflation is hotter than expected, we're going down. And probably a lot. If it comes in equal or better than expected, you know, we probably do one of these kind of deals. And even if we do one of these kind of deals, it's probably temporary when we come back down anyway. You know, I don't see a lot of light at the end of the tunnel here for a glorious ripping upside up to anything close to these all-time highs or anything like that. I just don't see it happening anytime soon, right? All that being said, I don't want to be all doom and gloom. We can still, you know, we're still making money in this market. I'm still up pretty nicely on the year, but it's been a fight, you know, tooth and nail the whole time, just trying to navigate through all this craziness, right? But, you know, again, as we will ebb and flow both ways. I'm sure there'll be some good news and we'll come up here, and then there'll be some bad news and all this. So I think the trend will continue to go lower. Just don't know how low that might go. So I'm trying to trade this thing be as nimble as I can and be as really try to create trades that have very little risk, you know, in either direction and really small size and things like that. I want a big risk reward. I want to risk, you know, say $500 and try to make $1,500 or something like that. Where normally I would risk $10,000 trying to make $25,000 or something like that. But in this market, just, you know, I am all about singles and doubles, and that's really, of course, depending on what size account. If you're trading a $10 million account, $500 is not going to help you, but you get the point. So again, in the meantime, we trade this thing. We need to be very careful. Let me show you one other thing here. If you look at the S&P and we flip over here to our basic moving average, you can see that this is the volatility right there. We're at about a 27 on the VIX, and it's pretty elevated, right? So, you know, does it go higher from here or lower? Yeah, nobody knows, but it is pretty elevated here. But try to think within these ranges. There's your 200-day moving averages. See, the last time we hit the 200-day, I thought we'd come up here and hit it and fail, but we didn't even get that far. You know, so this market's not looking strong. So all that being said, try to use trades that you can put the volatility on your side. It's elevated volatility, maybe selling credit spreads, maybe an iron condor, maybe a calendar. I'm using some diagonals right now, and they work pretty well. They don't have a lot of volatility exposure. And just be careful, because this thing will turn on a dime if you're short or long. It won't matter. You know, you got to be able to trade on both sides of it. So if you want to learn how to do that, join us in the bias room. Join me in the bias room that I run, or join us at Simpler in the main room. I am doing a mentorship coming up here pretty soon, and I will be covering basically when to know when to use which trade, and what are the different type trades and how to use them in different markets and things like that. It's, I hate to say soup to nuts, but that's what it is. It's front to back everything about different trade strategies and when to use them and all that kind of stuff. So if you want more information on that, I will, I don't know if I have a link ready for that thing yet, but it's coming up. Just reach out to me at Simpler Trading, Bruce at simplertrading.com, or a customer service at Simpler Trading, and we'll be glad to help you. That mentorship starts in about 2 weeks. So anyway, I did want to mention that because it is very worthwhile. So anyway, other than that, be careful. Be careful. This is going to be a very twitchy market, and you got to limit your risk here, and you got to be careful because there's no no way to tell which way this thing is going to go next. But I think ultimately, even if we spike up, I think we're going to go lower. So unfortunately, but a lot of it will hinge on next week with CPI and what happens there. So really keep an eye on that next week, and we'll see what happens. So thanks for the time. I appreciate it, and I will talk to you guys soon. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me